Here's part 2 of our Chapter 1 video lecture. So let's focus on the calculation of the standard deduction amount. That's this amount right here. As you can see, we're going to compare it to something called itemized deductions, and we're going to deduct the larger of the two. In fact, let's take a look at it on the tax form. So here's our 1040 form again. And then further down here in line 9, we're going to deduct either the standard deduction or the itemized deductions. We're going to deduct the larger of the two, and that's going to save us more taxes of the two. And for most people, the standard deduction amount is larger. I read somewhere 90% of taxpayers filing 1040 forms, 90% of them claim the standard deduction, and only 10% will claim the itemized deductions. Again, you're claiming the one that's larger to save you more taxes. So typically we'll find out in chapter number 4 that if you have a home mortgage or make lots of charitable contributions or have major medical costs, maybe only then your total itemized type deductions are larger than your standard. And again, you can see the basic regular standard deduction amounts are based upon the filing status and the matching dollar amount listed here. But let's take a look at a little bit more complex situation. So again, you're going to see that basic standard deduction amount that's listed in that left-hand margin of the 1040 form, or additional for age meaning 65 years old or older by the end of the tax year, or if you're legally blind. The filing statuses we saw there are 5 different categories, and we see that there's matching dollar amounts of standard deductions for each of the filing statuses. You can see there's just 3 different amounts in this column. The married filing joint and qualifying widow have the same dollar amount, and the married filing separate and single have half of that married filing joint amount. And the head of household regular basic standard deduction falls in between the 2 other amounts. And then if you are blind or age 65 or older, again, based upon the filing status, you get an additional standard deduction. And notice that if you're unmarried, like this single and head of household, it's $300 more than if you were married. Again, this additional, yeah? So let's take a look at, go back to our Laulima folder. Again, this is the folder in our for chapter number 1 for Laulima. And there's lots of handouts. So let's take a look at one regarding standard deduction. This is in the instructions to the 1040 form. And we'll come back to this first worksheet, but let's take a look at this second worksheet here. So this is for those who are age 65 or older. That's what this date means here with the date of birth. Or you're blind, and you would check off boxes here for what you qualify for, including if you're filing a joint return, and you tally up the number of boxes, and based upon the filing status, here's the number of additional you may qualify for, and then the matching dollar amount. Let me show you another table. Again, back here in our Laulima, Chapter 1 folder, I've summarized the standard deductions for both federal and Hawaii over the past few years. So this is what you see in the book, yeah, our textbook. But I also have Hawaii standard deductions. And you can see they're much smaller than the federal standard deductions. So what you may want to do in any one year, at least in this 2020 year, is to claim the standard deduction for federal, but claim itemized for Hawaii if your itemized deductions are larger than this. It's perfectly legal to have the two being different. Yeah, one claiming maybe standard and the other claiming not this standard but the itemized if it's larger. There's also something called exemptions. And for the past few years, all the way through the year 2025, there's no exemption deductions for federal. But Hawaii has exemption deductions based upon the number of taxpayers and dependents being claimed on the return. So we really don't focus on this exemption deduction in our textbook, which is just covering federal law. But you may need to know exemption deduction if you're preparing a Hawaii tax return. Let's go back to the tax form again. So we're trying to figure out the dollar amount to put here for standard deduction. So here's an example. We have Miriam and Scott. They're filing a joint return. So based upon that table here, married filing joint would get a regular standard deduction of $24,400. We're also told that their ages are 60. Okay, that's the under the 65 limit, and 66, which is over the 65 limit. So they get an additional 1,300 of standard deduction. And they're not blind, so we just add up the basic and the additional to get a total of 25,700. And for most people, would be much larger than their itemized deduction. So this is what they're going to deduct here in that line 9 of the 1040. Example 2, we have Tina, who is a head of household. She's under 65 and not blind. So basically all we're doing is looking at the tax form. Here you can see this 18,350. If you look at the tax form, you're going to see it right in the margin here for head of household filing status that you're going to put here in line 9. Let's try another one here. Ryan, single filing status, over 65 and legally blind. So you can see here's the basic amount for single filing status, and for single additional you get 1650, and if there's another 1650, so you add up all three, and the total of his standard deduction is 15,500. Now there's situations where you need to figure out the standard deduction where the taxpayer is being claimed as a dependent. So let's go back to that 1040 form. So if you're being claimed as a dependent on someone else's tax return, you still may be required to file a tax return for yourself. A typical example would be, let's say, a high school or college student with a part-time job, and they're being claimed as a dependent on their parents' tax return. But the dependent is required or wants to file a return maybe to get back a refund. So here is the student's name up here. But then you got to check off someone can claim you as a dependent. Okay, because your name will be showing up here on your parents' return. So there's a special formula we have to use to calculate a dependent's standard deduction. So here's the formula. The minimum standard deduction any person will have is 1,100, but it can be bigger. We're going to take a look at the dependent's earned income. This word earned income is kind of strange. I would use maybe the word work income. You know, a job or even a business. So if you have interest income, that's not earned income. Even though you still have to report it and pay taxes on it, you have to put down here in this formula the amount of work income you have, and you're going to add $350 to that. And whatever that total is, you're going to compare it to this 1,100 and pick the larger of the two. Now you're going to compare that larger amount with the regular standard deduction of the taxpayer. So again, going back to that table of standard deductions, typically the dependent is going to be single, and the regular standard deduction for a single is this 12,200. So typically you're going to look at that 12,200, the regular standard deduction, and compare it to that larger amount we calculated previously and pick the smaller amount. In other words, the standard deduction for this dependent cannot be bigger than the regular standard deduction that they normally would claim. Now, what makes things a little more complicated is if your dependent is blind, if your dependent is this dependent is 65 or older, to this smaller amount, you would add that additional standard deduction we saw. Let's see, we can go back over here. Possibly, right? If they're over 65, if that dependent is over 65 or blind, you would add that additional 65, 1650, I think it was, yeah, to get the total standard deduction for that dependent. So let's take a look at some examples here. We have Tyler, 18 years old, claim as a dependent on the parent's return. So we know automatically you're not going to get the full regular standard deduction. But Tyler works and he has work or earned income. Again, you don't count interest income in this calculation for standard deduction. Yeah, work income, 2,200. So the formula is to add that work income with a flat amount of 350, and you compare that with this total here of these two amounts with 1100. 1100 is a base amount. Nobody can get a smaller standard deduction than this. And of the two, you pick the larger, which it comes out to that 25,500. Then you compare that 2550 with the regular standard deduction. And of these two amounts, you pick the smaller. So what he gets is just this 2550 as his deduction. Yeah, 2550. Let's see if I can lay it out again. So here's the minimum standard deduction anybody can have. But then for dependents, you take their earned income and you add a flat 350 to that. And of these two, you pick the larger, which is 2550. Then you compare that with the regular standard deduction of 12,200. And of that, you pick the smaller. Yeah, here's the larger, and here's the smaller. So here's standard deduction. Tyler's standard deduction is going to be this 2550. Next example, we have Lauren, full-time student, age 21, claim as a dependent, that's why we're doing this special calculation, has earned income of 6,400. So to that, we're going to add $350, and of that total, we compare it with a flat 1,100. And of this item 1 and item 2, we pick the larger, which is going to be this 6,750. But then we compare it to the regular standard deduction for a single taxpayer. And then we pick the smaller, which is going to be this 6,750. One more example. Stan, this time not a college kid, but age 72, claim as a dependent on his son's return. Stan doesn't have any so-called earned income or work income, but he does have $550 of interest income. Now maybe Stan is also collecting Social Security, and we'll find out in Chapter 3 the general rule: if your income is relatively low, Social Security is non-taxable. So you don't include that here in any of the calculation for Stan's standard deduction. The only taxable income he has is this 550 of interest income. So he has zero earned income. We add that flat 350 So that total right here is 350 and compare it to a minimum standard deduction of 1100 everybody gets, right? And of these two amounts, we take the larger. But then we compare this with his regular standard deduction for looks like a probably single, right? And we pick the smaller, which is going to be this. But remember now, he is over 65. So he gets an additional standard deduction tacked on at the very end of the calculation. Here's what we saw as the amount to calculate um, in the previous screen, right? This 1100 compared to 350. And now we're going to tack on for age another 1650. So if you add up these two amounts, Stan's standard deduction totals 2,750. Let me show you that IRS instructions again. Let's see if I can find it here. We were looking at this worksheet here, yeah, for the additional standard deductions. But above that, here in the instructions to the 1040 form, is a worksheet for dependent standard deduction. So here at the very top, we see if the dependent has any extra standard deductions by checking off the boxes up here. Then we ask whether they have work income. Stan didn't have any, but if he did, we would add 350 to it and compare it to 1100 and pick the larger of the two. Then we compare that with his regular standard deduction. I presume it's single filing status. And we pick the smaller of the two. So we go back to this 1100. But then we add in that extra, remember that 1650, because he's over age 65 to get the total. And again, that would go back on the 1040 form here in line number 9. Yeah, for standard deduction for Stan, and we get to subtract it out from his income. Again, that's where you're checking off this box here, where our taxpayer up here is being claimed as a dependent on somebody else's tax return. I think that's all we're going to cover here in this part 2 video. So come back and take a look at the part 3 video where we're going to take a look at how do we determine which one of these filing statuses we're going to check off at the top of the tax return.